Time now for the morning trade. And for that, we bring in Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Alan, thank you for joining us. You have BP on your radar this morning. Tell us why.
Well, for me, it all comes back to commodities. I'm a commodities trader by heart, by origin. And so commodities are the building blocks for all the markets. You don't trade an oil stock unless you know what oil is going to do. You don't trade a bank stock unless you're up on interest rates. So these are the basic building blocks, and we're seeing a boom in crude oil, even though stocks have stalled here in the months of September anyways.
And that boom in crude oil tied largely to those production limits. Any other things that may be hammering crude oil, not hammering, but boosting crude oil?
Well, the reality is that production now has rebounded back to all-time record high. So most people don't believe that or agree with that, but that's a fact. But anyways, I use crude oil as a barometer of economic strength. And the fact is, crude was the last asset market to come back. If you remember, back last October, stocks bottomed. Then you saw other markets over time make their base and bounce off that bottom. And crude is really the last real asset class that finally participated. And that's a strong sign considering what we have with China and the ever recession talk fears. People are trying to talk themselves into recession that's not seeming to come. And the Fed's talking about 2% GDP growth. So I look at that as a positive for crude oil. And I'm going to say one more thing, and I bring it up to Oliver every week. But from 2011 to 2014, crude oil was at $100 or right around here. And the S&P moved up 30%. So they can move hand in hand.
You're absolutely right. That was a crude oil production rise that we saw from last week's data. But right. As we look to the markets right now, what are you seeing? We're mixed on the morning currently. It looks like the S&P 500 turned lower as well. The NASDAQ is still up right now. But what are you looking at right now? Your thoughts on markets?
I'm glad that October's here. That's what I'm for. We've got earnings that start here October 13th. That's going to be a fundamental fact of how well companies are doing. And earnings growth expectations are actually better. Let's remember, we've had great bounces over the last three earnings cycles with negative real earnings growth. So let's see what happens now. Looks like things are getting better here in the future. And that's what this is a function of. The PE for the S&P is still at 18. 18 is about the 10-year average. So it's still fairly valued if you consider that 22 was the high when the stock market made the high. We still have a ways to go on the upside. And I've got a lot of optimism left.
Alan, can you briefly run us through this example trade for BP?
Sure. BP is a stock that we had traded last September and got out of in January with a big gain. That's the idea here, is buying these in-the-money options that act like the stock on the upside. So the stock has a PE of 5, so it's very inexpensive. It's been between 30 and 40 for a year, been between 35 and 40 for 2023. A breakout of this range targets 45. I'm seeing as bullish levered option buying, which is very positive. I want to buy the April, 7 months at a time, 35 calls, traded for about 5. It's about $4 in the money. So you've got a long position here at this midpoint support at 35, a breakout of 40 sends this stock on the move. And let's remember, this stock is half of what its record price is. So there's a lot of upside potential here.
All right. Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Thank you so much for joining us. Now, coming up next, oil prices are rising, but why are gas prices falling?